as I said, there's a supply gap sitting there. We need more pounds delivering, and GoviEx with Muntanga is one of those projects that can come in and support and fill that gap.
Hello, you're watching Proactive. I'm joined by GoviEx Uranium CEO Daniel Major. Daniel, very good to speak with you. You're up with a feasibility study for your Muntanga Uranium Project in Zambia, so a very big milestone for the company.
Yeah, it's nice to get that program out of the way. We obviously announced the results for that feasibility study about a month ago, but we've now filed the official document itself, and that can be found on our website for those that want to read it. It underpins the simplicity of that project.
And you do say in the press release as one of the near-term uranium projects positioned to address the growing supply deficit. When you talk about near-term, Daniel, how near-term is it?
Well, our program at the moment would be to look at the various stages we've got, but in simple terms, 2028 is our target for production. And I think that's very doable. We have a really simple project, in my view, technically. It's a simple open pit heap leaching project. The mineralogy and the metallurgy has been very straightforward. We redid all of that test work last year as part of that feasibility study. Good infrastructure all around, so we're not having to build substantive infrastructure for this project. And it's just an open pit with a heap leaching operation, so nothing complex to it.
And solid economics as well. So apart from that low technical risk, solid economics, and also significantly leveraged to the uranium price if it goes higher.
Oh, absolutely. And I'm sure at some point we can chat later on in this discussion about the market itself. But I mean, I think that was also key. I mean, you're looking at a $32 cash cost, making good money at the moment. Even its long-term all-in sustainable is $36. So it is so good insofar as we've already started that program to make it one of these projects that can be built now, and the market needs these projects. We're looking at a supply deficit now on primary supply. We're looking at that supply gap getting even bigger as we're going forward. So feasibility study already done. We've already appointed Endeavour Financial on the debt side. Initial letters have gone out to potential lenders in the first phase just to understand who wants to be part of stage 2, which is to actually get the LOIs from them. Once we have letters of intent from those lenders, we go to the full due diligence program. So we're assuming that's 12 to 18 months of work. By the end of this month, we'll file the full ESIA document with ZEMA, the environmental agency in Zambia. And we would assume under normal timeline that by the end of this year, that would be approved. That would allow us to start construction. We already engaged with a number of the off-takers out there. We've sent them the feasibility study. And now that communication process starts explaining what our project is, what we're looking for from it. And then we'll start looking for those off-takes.
So, I mean, when you talk about significant leverage to higher uranium prices, talk to us about market dynamics at the moment then, Daniel. With that supply deficit, why is the uranium price not reacting?
Well, it is insofar as the term contract is very solidly up at $80 a pound and holding, and there are term contracts. But I think like all markets at the moment, it's suffering with uncertainty. The political uncertainty related to tariff discussions, etc., is impacting the market. And what you've seen, therefore, is most participants in the spot market pulling away from the market until they have some degree of clarity. But I think what you're going to see on that basis is you're basically building up a head of steam, that at some point that pressure has got to be released and people will have to come back to that spot market. And if you look at it through the whole cycle of uranium, EUP, the enriched uranium price, very high and actually getting higher. If you look at it from UF6, again, conversion very high. And we've seen this a few years ago as well, where EUP and UF6 went off ahead, and then suddenly U3O8 caught up and chased after it. And that supply gap is there. Utilities need uranium. And they need uranium from sources that they can buy it from. There's still restrictions on Russian and Kazakh uranium. And in fact, one of the issues that's come around as well is that because of the restrictions that were on Kazakh uranium, most of the future sales from Kazakhstan now go to China. And what isn't is going to Russia. So where Europe and the US was able to secure those pounds, they're no longer available or in much limited basis, in which case Africa is becoming very much more part of that portfolio. As I said, there's a supply gap sitting there. We need more pounds delivering, and GoviEx with Muntanga is one of those projects that can come in and support and fill that gap.
Well, Daniel, I hope you'll continue to keep us posted on progress. Thank you very much for speaking with us today.
Thank you very much.
That's Daniel Major, the CEO of GoviEx Uranium.